In this video, let's take a look at how I can earn $248 in just 3 days trading stock options. So I'm going to walk you through selling a covered call where I can make $248 for just a 3-day option trade. Did you know that I host an online community of option traders just like you and me? It's completely free to join, and it's where all of the members share tips and tricks about options trading. You'll also get early access to my YouTube videos, plus I post my trade alerts and actual trades for the whole community to see and review. And you can also get direct access to me for one-on-one coaching, so that you could do exactly what I do and generate a weekly income by trading stock options. Just head on over to school.com/simpleoptiontrading. I'll leave a link in the description down below, and it's completely free to join. So here's a daily chart for symbol SOXL. You can see it here. And we're interested on the actual date that I sold the covered call, which is August the 26th. You can see it here. And you'll notice that by this candle, it had just broken through the resistance level. This is at 27.46. So on this day, it was a green candle day. It had just broken through resistance. So a lot of positive factors here, including the RSI at 57, a little bit low from what I typically like for a covered call. But because the price did break above the resistance line, I was feeling pretty good about this. And so this is one of the reasons why I decided to sell the covered call. Now let's run through the covered call analyzer, one of the tools that I share when I do my coaching for my students. Let's go ahead and plug the values in, right? So today's August the 26th, 2025. That's the day that I sold the covered call. And it's for stock symbol SOXL. And for the expiration date, I chose August the 29th of 2025. And I own 100 shares, so I'm able to sell one contract. For the strike price, I'm using $29.50. And for the premium payment, I'm specifying 35 cents per share. Now my cost basis for the shares that I own is $27.37. So now we'll run through the analysis. We could see it's for a covered call using stock symbol SOXL. My cost basis per share is $27.37. I'm selling one contract using those 100 shares. And for those 100 shares, that cost me $2,737. Now, when I picked the August 29th expiration date, that made the length of this option contract 3 days. And by using a strike price of $29.50 and the premium payment of 35 cents, we could see that if this option contract gets exercised, I would receive $29.50 per share, or a total of $2,950 if my shares get assigned, which would give me a cost appreciation profit of $213, and that would be a return on my investment of 7.78%. Now, by specifying a 35 cent per share as the premium, when this option contract sold, I received a total of $35 as the option premium payment. And that money got deposited immediately into my trading account. It's mine to keep forever, and I can use that for whatever I want. Now that $35, that represents a return of 1.28% on my initial investment. So I'm getting just over a 1% return for this 3-day option contract. Now, if the option contract gets sold, my shares get assigned, I would receive a total payment of $248, which represents a return of 9% for this 3-day option trade. So from a profitability standpoint, this option trade is making a lot of sense to me. Let's run through both scenarios. So the first scenario is where the option contract gets exercised and my shares get assigned, and I get paid for my shares, $29.50 per share, in which case I would receive a total price appreciation profit of $213, plus the initial $35 that I received as the premium payment when I sold the option contract. And so the total profit to me is $248, or just over 9% for this 3-day option trade. And of course, out of that, I would set aside a portion of it so I could pay my taxes. Now in scenario 2, this is where the option contract expires worthless. Now, when I initially sold the option contract, I received $35 as the premium payment, and that money's mine to keep forever, even though the option contract expired worthless. And that represents a 1.28% profit for this 3-day option trade. Now, in addition to the option expiring, that also means I get to keep the 100 shares that I put up as collateral. And I can use those same shares to sell another covered call and collect another premium payment. So the chart looks good, and I've got a good entry point. The profitability analysis looks good, giving me at least 1% for each week that the option would be open. So I went ahead and placed the order to sell this covered call option contract. And let's take a look. So you can see that I'm selling an option contract for stock symbol SOXL with a $29.50 strike price and an expiration date of August the 29th of 2025. So you can see I submitted the order on August 26th at 6:49 a.m. Pacific time. And my order was filled 1 minute later that same morning at 6:50 a.m. Now when the option contract got filled, I received a premium payment of 35 cents per share. And because I sold one option contract, or 100 shares, that means I received a total premium payment of $35. Now with the option contract sold, there's nothing left for me to do with this trade except sit and wait for the expiration date. Now obviously I'm going to manage this trade by keeping an eye on it to see what happens between now and the expiration date, because I may want to execute a buy to close, which would allow me to close out this option contract, keep my 100 shares, and still make a profit. And if you want to do trades just like this one, so that you can generate a regular weekly income trading stock options, be sure to visit my school community at school.com/simpleoptiontrading. I'm going to leave a link in the description down below. Hey, thanks for watching this video. I hope it was useful and helpful to you. I really appreciate you joining me, and I'm looking forward to seeing you in the next video.